Good morning friends and welcome to the pre-market session. Friends, we had a weak closing for most of the global markets on Friday. US was down about 1.3-1.4% as some of the quarterly numbers were not up to the mark, particularly JP Morgan Chase and few others. Also the consumer sentiment data was not positive, and European markets were also down about 1.5 to 2.5% as the bond yields on some of the markets like Spain and Italy continue to be high at about 5.9 to 5.94%. So because of all these, we had seen a lot of weakness in the global markets, and today when we look at the Asian markets, they are also quoting weak because of the weak US and European markets, particularly the Nikkei and Hang Seng. Friends, back home, we also had a disastrous start to the quarterly earning number, with Infosys actually missing its annual guidance for the third time, and more importantly the next year guidance 2012-13 guidance that they have rolled out at about 8 to 10% kind of a revenue growth is definitely way below market expectations. And subsequent to that, the conference call that was there, there was no real positive cues that analysts could have taken home. So we believe that though the stock cooled off by almost 12 to 13%, the overall outlook continues to be challenging. One will have to watch how TCS and few other companies announces the numbers and what kind of management cues people are taking from those companies. But overall, this has definitely dampened the sentiment. On that note, let me invite Nandish. Hi Nandish, we had a very weak performance for our markets, particularly Infosys numbers were bad. In fact, we had rolled out a strategy and that really played out pretty well because we had recommended a straddle. So what's your take there?
We recommended a strangle and we made a profit of around 21,000. We bought 2,800 put option and 2,950 call option. Okay. So we booked 2,950 call option to 2,800 put option around 292 rupees, which we bought it around 55 odd levels. So we approximately made a profit of 21,000 rupees in the strategy.
Great. And also we have seen that the market has actually broken almost 50 to 20, 30 level, and looking at the SGX Nifty, we might close well below 5,200. So what is the reading as far as the open interest goes? I am told that there is a huge writing happening on 5,400 strike call options. True. So is there any important support around maybe 5,100 strike?
See, overall we are trading in the range, as I was mentioning earlier, 5,400 will act as a trend reversal point, and we have seen that 5,300, 350 again. We have seen a very good additions on the open interest front. Now that's what I was telling in the last time. We have touched, we have closed below the 200 crore open interest shares in the open interest on the Nifty futures side, and this time again we have seen an addition. So now what I feel that on the option front as well, we have seen a very good addition in 5,200, 300, 400 call options, and on the put option side, 5,200 and 300 put option has seen some unwinding. So I feel there will be a fall, but what I feel that 5150 is a psychological level, a 200 DMR, and we have seen a multiple supports around those levels. So even if we are breaking those levels, I'll keeping a 50 points buffer, and unless and until we are not closing below 5,100 levels, I won't be going aggressively short on the markets. In fact, if I get an opportunity today around 5150 levels, I'll be playing something in the banking stocks on the long side.
Okay. Also, we have an important RBI policy meet tomorrow, and we've seen some buying interest in some of the rate sensitives in the banking and auto and real estate. So is there anything in terms of strategy that we can recommend?
See, we have two strategies open at this time. We have formed a SBI ratio call spread by buying 2150 call option and selling 2250 call option twice the quantity. So the net outflow in the strategy will be almost nil. There will be around 3 to 4 rupees outflow into the 125 is a lot size. So that will be a maximum loss if SBI expires below 2150 levels, and the maximum profit can be achieved at the levels of 2250. So that is one of the bullish strategy, and to play the uncertainty and the volatility, we have formed strangle, same like Infosys one. So we have bought 880 put options, and on a higher side we bought 920 call options, and then we have converted those strategy into we have bought additional position of 920 call option at 8 rupees. So basically we are playing a bit upside and then fall in the market.
Right. Okay. And other than that, are there any other trading strategies that we have for today?
See, intraday, as I was mentioning, if I'm expecting a pullback, so 5150 is a very good level. So if I get opportunities, so we have recommended two stocks, one stocks on a long side and two stocks on a long short side. So Aurobindo Pharma, what I feel that has a positive bias, 114.85 is a very good level, so which make it as a stop loss. And DLF and Kane is looking negative to me from the current levels. 343.65 is a resistance, and 201 is a resistance for Kane.
Right, Nandish, thanks a lot for the update. Friends, just to wrap it up, today we have inflation data coming out, and the market expectations is that it would be around 6.65%. Though it is going to be less, the fear that people have is that because we have not done any kind of a hike in the petrol prices and the food articles continue to remain at a very high level, there may not be a big positive trigger because of that. Also friends, tomorrow there is going to be a RBI policy meet where the expectations are that we might see a 25 basis points rate cut, and some section of the market also expects a CRR cut anywhere from 25 to 50 basis points, because the feeling is that unless you see a CRR cut and the liquidity in the system improves, the rate cut may not have the desired impact. Also friends, there is a news on the Coal India stock that they might enter into a model agreement for purchase of power from some of the consumers. So Coal India could be the stock in the action. Also friends, on Friday DCB came out with a good set of numbers, and on most of the counts they were better than expectations. So there might be initial trading opportunity in the DCB stock. And friends, just to wrap it up, the strategy that we are recommending for the RBI policy meet is that on the SBI we are recommending a bull ratio spread, which means that we are recommending a buying of 2150 call, let's say one lot, and against that one should sell double the quantity of 2250 strike call. So there is no outflow in this strategy. In case the stock goes up, then you stand to benefit. And in case of ICICI, because we believe that there is going to be a significant volatility because of the RBI policy meet and the quarterly numbers, we are recommending buying of both calls and put options in ICICI. One could look at buying 880 put option and 920 call option. So in case there is a huge swing like what we had seen in case of Infosys, we would stand to benefit. That's it from all of us friends. Have a nice trading session. See you tomorrow.